Do you know how much your parents are paying for their life insurance? Not the death benefit, the premium. They may have purchased that policy 20 or 30 years ago, and they may still be paying for it today. So here's the question: does that policy still make sense for their life today? Before they cancel it, surrender it, or simply stop paying the premiums, there are a few things your family should know. Think about why your parents may have purchased life insurance in the first place. Maybe they had a mortgage. Children were still financially dependent on them. They needed income protection. They wanted money available for their family's future. At that time, the policy may have made perfect sense. But 20 or 30 years later, life may look very different. The mortgage may be paid off. The children may be financially independent. Your parents may be retired. Their income may have changed, and their financial priorities may be different. Life changed, but the policy kept going, and so did the premiums. There are several reasons your parents may continue paying for an old policy. Maybe they still need the coverage. Maybe they want to leave money to children or grandchildren. Or maybe they've simply paid into the policy for so long that canceling it feels like walking away from something valuable. That's understandable, but it doesn't answer the most important question. Does keeping this policy still make financial sense today? You don't need to become an insurance expert. Start with a few basic questions. What type of policy is it? What is the death benefit? How much are the premiums? Have those premiums increased? Who owns the policy? Who are the beneficiaries? And then ask, why are you still keeping this policy? There may be a very good reason, but don't assume the reason from 25 years ago is still the reason today. Suppose the premiums have become difficult to afford. Your parents may decide, let's just cancel it. Before they do, understand what options may be available. Depending on the policy and their circumstances, they may be able to keep it, change it, surrender it, or in some cases, sell it. That last option is called a life settlement. A life settlement is the sale of an existing life insurance policy to a third-party buyer. The policy owner receives an agreed cash payment. The buyer becomes the new owner of the policy, pays future premiums, and ultimately receives the death benefit when the insured dies. But this is important. Not every policy qualifies for a life settlement, and selling a policy isn't automatically the right decision. It is simply one option that some families may not know exists. Several factors can affect whether a policy may qualify. These can include the insured's age, health, policy type, death benefit, premium requirements, and other details of the policy. That's why you can't determine what an old policy might be worth just by looking at the death benefit. The policy needs to be reviewed. A professional policy review looks at the policy and the circumstances surrounding it. The purpose is not to automatically sell the policy. The purpose is to understand the options before an irreversible decision is made. Sometimes keeping the policy may make sense. Sometimes changing it may make sense. Sometimes surrendering it may make sense. And sometimes exploring a life settlement may be worth considering. The important thing is knowing those options before the policy is gone. So, if you're helping your parents organize their finances, find the life insurance policy. Look at the premium. Look at the coverage. Then ask them, does this policy still make sense for you today? And if they're thinking about canceling or surrendering it, don't make that decision automatically. Find out what options may be available first. Before you cancel it, know your options.